Hey everybody, this is Osprey from MyChartCoach.com, and in this video we're going to be taking a look here first at Twitter, and then we're going to be looking at all these top small caps that were in play today. It was going off the hook today. There were quite a few big winners. Stocks that were up early in the day followed through, and many of them kept pushing higher. There were a couple of black candle type plays that were a bull trap. I'll show those stocks later. And there's some stocks that are setting up as well. So it really pays to pay attention and stick through the whole video. I know that they're long, but if you catch the ones at the end, sometimes those are the best plays going forward. If you look at TWTR here, it closed up or closed down nearly 5% today. Okay, so it got hammered. Put options were in play today. They returned some monster percentage gains. They were many contracts were up over put options were up over 700% early in the day. As you can see here, they gave back a lion's share of the gains, but still closed up nicely. You could see here calls were down heavy today. They were bouncing off of their lows, and so a lot of people played the intraday bounce. I will show that here in a second. So I wanted to show you Twitter because not only can you make can you do well with the with these small caps that are running, but the options is the penny market for the big boards, and if you play your cards right, there's some big gains to be had as well. Today, Twitter came down here and it bounced off of the lower Bollinger Band, and so that was a good to see it bounce off of that level. It needs to hold 42. You can see this long lower wick bounced off that level. Now it did close below the middle Bollinger Band. We were discussing this in the chat today. That was the key level to stay above. The close below 44.78 is a red flag, and it does signal downside risk. It needs to get back above that level in a hurry. For the last 3 weeks, there's been this sideways channel between this 42 to 43 support zone and this 47 resistance zone. And so today, both levels were tested, but to the extreme. And so going forward, a break above 47 is going to signal upside potential, and a breakdown here below this 42 to 43 support zone is going to signal downside risk. If that middle Bollinger Band turns into resistance, a new downtrend could begin. If that happens, the candles could work their way back down to that 50-day simple moving average. As you can see, there's a couple of unfilled gaps below. You have an unfilled gap right here, so a drop down to just below 42 would fill that first gap, and then you have another gap down here to 38, and then a drop down to the 50-day simple moving average would fill the second gap. So that is the downside risk. The lower wick shows there was heavy loading. If you look at the Twitter 15-minute chart, you can see the big pullback today. All the money was made down here on the puts. When it came down and hit the lows of day, people were banking heavy off of the 42 here. People locked in gains, and then they jumped ship here, and everybody started going long. You can see Twitter came out in response to the deleting 70 million users. They came out to try to save the day on that, and that created a spike. And what happened was the candles got back above the middle Bollinger Band, and so if the candles can stay above 43.50, Twitter is in play for a bounce. Okay, now 43.50 is the stop loss level. If it breaks below that level, it will be a risk to hold long. Right now, it's in kind of the no man's land right now, because what it's doing is it came up here and it hit this red and blue line, which is the 200 and 300 simple moving averages, and just above are the green and gold lines. It has to break through all four of these moving averages to head higher. And so if you're looking to go long, it might be better to just wait for that break above the 50 simple moving average, and that basically hitting 45 or above to signal, okay, Twitter really is pushing higher. The risk is if it fails to break this 44.50 resistance zone, it could come down here and test 43.50. 43.50 support breaks, then you're looking at the 42s again. So right now it's trying to set up the bounce, but it's not in the clear yet. It's setting up but not in the clear. So we'll keep an eye on Twitter and see if it can get a reversal going, or if it's going to start a new downtrend. Okay, now let's look at some of the the big winners today. Check out STAF, ticker symbol STAF. It was alerted at the open in our chat today. You know, I recommend you coming and checking that out if you want to get in on the early entry points, the early alerts. And not only am I putting out alerts on these plays, but I'm giving you technical analysis where I'm breaking it down on multiple time frames and showing the support and resistance levels, and where you would you know, need to be taking profits, or where you want to keep riding, or you know, just trying to you know, be the chart coach in real time during the trading day. And so it pays to be there. As you could see here, it broke out above all the moving averages today on the daily chart. It had the gap up open above the 50-day simple moving average, the green line. It got above the gold, red, and blue lines. That's the 100, 200, and 300-day simple moving average. The 300-day simple moving average at $3 is the big level to hold. If it pulls back, you want to see it stay above that level. Right now, it's breaking above the October, or actually September 520 resistance zone. This is this high close from back here in October, and if it can stay above that level, that's going to signal it wants to head higher. If you see the share price drop below 520, that could signal consolidation. Today's candle did form well above that upper Bollinger Band, and many times when that happens, the candles work back into the bands. Look at this giant white candle. That's a huge flagpole. You know, you could expect a bull flag or pennant to come off of that. You know, it could keep pushing higher. It's all about breaking resistance. If it gets above 560, that would signal more upside potential. If you look here at the STAF weekly chart, you can see how it broke above the dotted purple line, the green line, and the gold line. That's the middle Bollinger Band, the 20-week moving average, the 50-week moving average, and the 100-week moving average. It broke above all three key levels. As you can see here, it's been years since there's been a close above the 100-week moving average, so that is the key level to close above this week. This week's candle will not set until the closing bell on Friday, so on Friday, if it closes above 364 and above this 100-week moving average, that would be very bullish. Right now, it's breaking the high close from back here in September. If it could stay above 450, that would be bullish. Also breaking April high close of 2017, needs to stay above that level, and then the other level is from November of 2016. They're all kind of in the same zone here. You can see that's where the top was made on the bounce, and then the candles keep hitting that level and failing to break. Once again, it's back at that level, and so is this once again going to be you know, resistance? You can see how they keep it, you know, each time that for the last several years that STAF has made a run, it's stalled out in this zone, and so if it can close above this November 2016 price for the week, that would be the signal it's finally ready to head higher. And then you're looking at 650 up here would be the next key zone to break through. You have 650, and then if it can get through 650, it'd be $8. Now, if it fails to break through this resistance zone here, that would signal consolidation. You could see the candles come back to test that 100-week moving average. If you look here on the 15-minute chart for STAF, you could see here it pulled back intraday. It got below that middle Bollinger Band and started breaking down. It did bounce, and then it had a strong push into the close. It closed above high close resistance here at 540. It needs to stay above 540 to head higher. If you see it drop below 540, that could signal consolidation. As long as that middle Bollinger Band at 470 is holding, this uptrend is intact. Okay, look at ISR here. Huge winner today. Closed up 143%. So congrats, everyone. They had some news come out, and then it was halted, and then it took off running again. And so, yeah, this was a huge move. It did have a big, it had a big gap up open today. So it closed on Friday down here below the middle Bollinger Band. You can see all these lines here are all the moving averages stacked up, every single moving average in the chart. And so it opened above all the moving averages, and then it broke out above high close resistance. You know, above the top of the candles here at 55, and then it just took off higher. You know, today's candle did close well above the upper Bollinger Band, so it's pushing really hard. If it did pull back, the first support level on the daily chart is way down here at 69 at EMA4. Check out the big volume spike today. If you look here on the weekly chart, this is what it's all about, in my opinion. It needs to stay above the red and the blue lines. That's the 200 and 300 week moving averages. If it can stay above that blue line at 98, that should signal that it wants to head higher. You know, I did put out alerts today, you know, saying that, you know, it needs to, you know, 98 is the key level to stay above, and that's why, because it's the 300-week moving average. If it were to drop below that level, that would be a red flag and signal to lock in gains. If it's trading above 98, that's a signal that it could keep pushing higher. Let's look at ISR on the 15-minute chart, and this is going to show the next key resistance level to break. In order for a stock to keep heading higher, it has to keep making new high closes on the intraday charts, and right now it needs to make a close close above this closing price at 2 o'clock. That was the gap up open after the halt. You know, it got halted right here, and then they reopened it here, and it pulled back, and then it's worked its way back up, but it hasn't made it back up to that high here from after the halt at 2 o'clock. And so it's this 118 level, 118 to 120 level. It has to break above and close above this white candle here to signal it wants to head higher. If it fails to do that, it could consolidate. You notice how the orange line was holding today. You know, if it dropped below 87, then you could have the middle Bollinger Band at 73 tested. You know, it just right now it's going to be real important that it stays above this EMA 4 at 101. You know, being the 300-week moving average at 98. You know, if it were to drop below you know, just the bottom line is if it gets below 98, it's going to be a red flag that it could consolidate. Okay, let's look at MBVX. Okay, another big winner today. It closed up 150%, but it had a red flag today. Okay, so this stock was a bull trap likely for many people, and so you know, if you loaded on Friday, you were a big winner, or even if you loaded pre-market or on Friday after hours, you know, you did well because there was a giant gap up open. The open today was way up here at the top of this black candle, and the share price ran up to the blue line. That's the 300-day simple moving average. It broke above intraday, but then it pulled back below. When this happens right here, when it gets above intraday and then pulls back below the 300-day simple moving average, that's a sell signal. This is a lock in gain signal. If there's one thing that you learned from my videos, it's to always lock in gains at the 300-day simple moving average if that level fails to break. And so especially if it trades above it intraday and drops back below, it's the stop loss level once the share price is above that level. You don't want to hold when it drops below because that signals consolidation. Once again, that theory is proven again today as the share price dropped all the way down to 142 after trading above 239 and hitting 250. So if you're always locking in gains at that 300-day simple moving average, you're maximizing the gains. Many times you'll find that you're hitting that high of day. So just take note on that. And that works on all time frames. And so yeah, if you want to learn more about that, come check out the chat. So it pulled back below this 200-day simple moving average, another red flag. If you didn't lock in gains there, that was another red flag to lock in gains. When it's above the 200-day simple moving average and drops below, signal locking gains. Basically, when the black candle forms, the safest thing to do is just head to the sidelines, look to regroup. You could possibly re-enter the next day if it reverses, but it's signaling that the bears are actually in control, even though the share price is up on the day. Right now, it's bouncing off of the 100-day simple moving average at 142. That level needs to hold. If that breaks, it could drop down here to the 50-day simple moving average at 112. Today's candle is floating well above that upper Bollinger Band at 124, and when that happens, many times the candles work back into the bands. So there's a good chance that this could keep pulling back into the bands. All right, so keep that in mind. If you look at MBVX here, you can see how it had the big open here, and then it ran up and it made the new high close, but it never got back above 240, and they faded it. When it got below that middle Bollinger Band, that was a major red flag, and then it came down and it's been drifting lower. The next big support level is going to be this 50 simple moving average at 128. If it can hit that level, that might be the level it could bounce off. It won't be bullish again until it gets back above that middle Bollinger Band at 184. The risk is there's a gap between low of day today and high of day on Friday. A drop down to 70 would fill that gap. So that is always the risk on a big gap up open. Okay, look at BNTC here. Closed up nearly 52%. And so this is another black candle setup. So yeah, when you're in and you see this form, the safest thing to do is to head to the sidelines, especially when it's on a gap up open above the upper Bollinger Band. The upper Bollinger Band is way down here at 281. Notice how today's candle is floating completely above the upper Bollinger Band. When that happens, many times the candles work back into the bands. This started intraday. The open was way up here above 420. You know, it closed way down here at 335. Look for a technical bounce off of the 200 and 100-day simple moving averages at 280. And so you could get a bounce off of 280 down here. That would be a possibility. It looks like there was this gap over here. You can see a gap. Yeah, that gap didn't quite fill. If it drops down to $3, it would fill this gap right here. But yeah, there's a new gap down here. So the bottom line is when you see this black candle form, the safest thing to do is just you know, head to the sidelines and look for that chart to turn bullish again before re-entry. You can see here the black candle, and then it just got faded. And so yeah, the drop below the middle Bollinger Band signal more downside risk. Right now it's trying to get back above that level. It has to get above 350 for the chart to turn bullish again. If you see it trading above 350 tomorrow, and they do this sometimes, that they could push it again. You never know. If it gets above 350, it would be back in play. But if 350 is resistance, you could see a drop down to the 50 simple moving average at 285. Okay, take a look at CVM. This was a nice bounce play today. Closed up 44%. Congrats to everybody in the chat. We were on this, when it was, bouncing and breaking above the EMA 4 down here, and so that was a nice close above that level. As long as it stays above EMA 4 at 105, it's in play. If it were to drop below EMA 4, that would be a sell signal. You can see there was a gap up here, and so there's a gap between high of day on this candle and low of day on this candle, and so the candles are working their way back into the bands and back up to this bottom of the gap level. And so if EMA 8 here, resistance breaks at 129, look for a potential run up to EMA 13 at 163 and the bottom of the gap at 180. Those will be the targets if 129 breaks. If it stalls out at EMA 8 at 129, that could be a temporary top. It needs to break that level to keep pushing higher. Yeah, so this was a good bounce today. It looks like bullish kicking reversal pattern formed today. You can see how there was the gap up open, and so many times there's follow through on that pattern. Also look at the really big volume spike today, so that's what you want to see on a bounce play. As you can see here on the 15-minute chart, it really heated up. The Bollinger Bands were really tight on Friday. The Bollinger Bands are these purple lines here, and you can see how they're super tight heading into Friday, and then today they exploded higher, and so there was a push above the 50 and 100 simple moving averages at 90.94, and then also above the red line, the 200 simple moving average at 111. And so if it can stay above 111, that's going to signal more upside potential. You could see the share price work its way up here to this 140 level. That's going to be the next target and key level to break as it heads up, potentially up to the bottom of the gap, which is lined up with the 300 simple moving average at 181. So if it gets above 140, look for a potential run up to 181. That's going to be a big level to break. It's always tough to break the bottom of a gap. Check out the big volume, heading into the close here. So there was some big loading going into the close. We'll see if it can push higher. It did form an inverted hammer into the close there. Okay, take a look at LEDS. Closed up 40% today. Yeah, this was a nice move. It came up and broke above resistance. This was a chart from earlier in the trading day, and it broke above this high close here in June. And so that was signaling more upside potential. And then it also got above the high close here in May, these two high closes. And so the close above, these three circles here, it was signaling more upside potential. The break above it intraday was signaling, okay, yeah, this is looking like it wants to push higher, and it did. It got also above the closing price here at 550, and then after hours, it's breaking above the closing price here in April. This red line here at $6. It's currently at 630 right now, and so the big level to break on the daily chart is going to be this open over here, just above $7. If it could get above that, then it would be back up in the 8s. Now, it came down here and filled the gap. There was a couple of gaps here. It was an odd chart. There was a gap between high of day on this candle and low of day on this candle, and then low of day on this candle and high of day on this candle. And so this whole gap section has finally been filled here with today's candle. And so whenever that happens, you want to see it stay above the bottom of the, well, I guess actually, did that gap already fill? Well, yeah, I guess it's this top one. I know, it's a, yeah, anyways, the bottom line is you want to see it stay above that $5.50 to $6 zone. If it were to drop back below those levels, that would signal possible consolidation. If we look here at the LEDS weekly chart, you can see here the bullish development interweek is the break above this red line. That's the 200-week moving average at 464. Now look at all the times that it broke above the 200-week moving average intra-week, but failed to close above. That's what all these wicks on the candles represent is the share price was trading above the red line inter-week, but it pulled back and closed below. That could happen again here. They could drive this down, and it could end up closing below 464 for the week, and it could be another week, just like every single one of these candles. That would be history repeating itself. Now what we're looking for is a bullish change in trend. We're looking for this trend of failing to break above the red line to be broken and a new trend to begin. And a new trend would be a close above the red line. If it closes above the red line and for the week, the closing bell, this will not set until the closing bell on Friday, that would be really bullish. And then what we're looking for now is a break above the blue line. That's the 300-week moving average at 678. You can see that level's been tested as well, and it's been the big resistance level to break. So going forward, if it can close above 678, that's going to signal more upside potential. If it stalls out at that 678 resistance zone, that could signal a temporary top after this 4-week run. Okay, take a look at IMNP here, closed up nearly 16% today. So keep an eye on this one. It had a nice close above the middle Bollinger Band today at 20 cents. If it can stay above 20 cents, it could get a new uptrend going. Back here in June, it closed just above the middle Bollinger Band, the dotted purple line, but it failed to stay above, and the downtrend continued. So today's close is signaling a possible new uptrend starting. It has to stay above 20 cents. If it drops below 20, that's the stop loss level. It will be a risk to hold long if it drops below 20. If 20 holds, look for a potential run up here to that 50-day simple moving average at 25. That'll be the next big level to break. Okay, look at the IMNP 15-minute chart here. You can see it got below the middle Bollinger Band at 22 cents into the close. It needs to get back above that level to head higher. If it can get above 22, the high close here at 11 o'clock at basically 235 is the big level to break. If it can close above that level, that's going to signal that it wants to break out higher. So above 235 signals more upside. Fail to break 22 signals that it could consolidate. It could come down here and test that 50 simple moving average at 20. It needs to hold that level. It would be a major red flag if it dropped below. Okay, take a look at NNDM. Okay, this is another a nice move today. Closed up 20%, but it had the gap up open, and it formed the black candle, the indecision candle, the spinning top. Okay, so you have the small real candle body with the long upper and lower wicks. That signals indecision. It did close above the middle Bollinger Band. And so if it can stay above 230, then it could push higher. If it drops below 230, the risk is that it comes down here and fills the gap between low of day today and high of day on Friday. So a drop down to just below $2 would fill the gap. This isn't an interesting play if you're long. If it drops below 230, it's only interesting if it stays above 230. If it does stay above that level, it could possibly work its way back up to this high close on June 18th, and that 200-day simple moving average at 296. Those would be the two big levels to break to the upside. Okay, let's look at CLRB. Closed up 22% today. So keep an eye on the stock. It's trying to heat up. It made a close today above EMAs 4, 8, and 13. And so that's the first close above those levels. There's a close above EMA 4 here, but the last time it closed above EMAs 4, 8, and 13 was back here on June 11th. And you can see that was when it was above the middle Bollinger Band. And when it dropped below, you can see that was the start of this really nasty downtrend. And so today's close above all those levels is signaling that this possible reversal of this downtrend. And so what has to happen now, it needs to stay above these levels. If it dropped below 66, that would make it a risk to hold. Now to the upside, it needs to break 765. If it closes above that middle Bollinger Band, then it could possibly get a new uptrend going, or at least make a run up to that 50-day simple moving average at 93. You can see the green dots here flip below the candles. That's SAR, stop and reverse, signaling a possible start of a new uptrend. You've got the bullish crossover on MACD on the 8, 13, and 5. 12, 26, and 9 is pinched. You need to see a crossover there. It had the volume spike. It's all set up. You have the bull cross on ADX, RSI is above 30, Fast O is above 20. The chart's all signaling it's heating up. It just has to get back above the middle Bollinger Band. Fail to break the middle Bollinger Band would signal a temporary top and more downside risk. Okay, take a look at GEVO. GEVO closed up 18% today, so this is back on our radar. Yeah, it did end up closing above EMA4. This is another one of our chat plays. You know, I covered all these stocks in the chat today with charts and technical analysis. So if you want, you know, you're getting a recap right now of information that's already been shared with everyone. So everyone in the chat's already been able to place their bets or make their moves or take their profits or get in. You know, before you're viewing this video. And so if you're in the chat, then you get a chance to make those moves before the people in the video see the information. And so you're one step ahead of the game. And so it's all about early entry point. And so for GEVO here, it did end up closing above EMA4 at 447. And so if that level holds, then it's going to be in play. And so what we're looking for is it working back up to this bottom of the gap level. There's a gap between high of day on this candle and low of day on this candle, and so it could possibly work its way back up to EMA 13 and the bottom of the gap at 567 if it can stay above 447. So you know, there could be another dollar to the upside just to hit the next key resistance zone. If it drops below 447, that is the stop loss level, and then, you know, it'll be a risk to hold. It's only a good play for a bounce here, technical bounce, if it can stay above that level. Okay, so if you look here at the GEVO 15-minute chart, you can see it had the really tight Bollinger Bands leading into today's move. You can see the purple lines. It's really hard to even see the candles here. They were so tight. And when that happens, there's going to be a break to either the upside or the downside. And fortunately for the GEVO bulls, the breakout was to the upside. And so the candles are above the 50 and 100 simple moving averages and above the middle Bollinger Band. As long as they're staying above all three levels, there's more upside potential. Right now, the big level to break is going to be this 200 simple moving average at 499. If it can break above that level, then we're looking at a potential run up to the bottom of the gap up here at 550. And then you have the 300 simple moving average at 625. So 550, 625, those are the three key levels to break and targets above. Okay, fail to break any of those resistance levels, and that could signal a temporary top. You know, this really got, you know, the volume really picked up, and it had that nice push here. You know, this is when it was alerted in our chat, when it was breaking out here and heating up with the volume. And so, yeah, so it was good to see it close strong. You know, it closed strong, and you know, that does signal more upside potential. So keep an eye on GEVO tomorrow. And then another one to look at is XGTI, closed up 15% today. So this got back above the middle Bollinger Band. I mean, it keeps doing this. You can see it got above the middle Bollinger Band here, right here. It keeps doing it. It's back above again. Is this going to be the fourth time? You know, is this going to be the magic where it finally breaks, you know, holds support and breaks resistance? Well, we're going to find out tomorrow. It's all about this 50-day simple moving average at 74. I mean, it closed today, what, at 724, I think. And so just above that level is the 50-day simple moving average, the green line. You have to go off this chart to find the last close above that level. So tomorrow, if you see XGTI trading above 74, that's going to signal, okay, yeah, it's in play today, and it could break out higher. If it gets above this upper Bollinger Band at 786, it could possibly head back up to that 100-day simple moving average at 973. You know, you've got the, you know, it's lining up here with the high close. But if it fails to break that 74, then it won't be a good play. It's only a good play if it can get above 74 and hold that middle Bollinger Band at 692. It has to stay above 69 cents. And then one more to leave you with is OCX. Okay, it only closed up 3% today, but it had some after-hour news here. Let's see here. They announced encouraging results for their lung cancer blood test. And so, yeah, so it was trading higher. It was up a couple bucks, and after hours trading, it should be a gap up open type play tomorrow. And so anytime that this happens, you need to be on the lookout for a black candle. So if you loaded today after hours, or if you're loading pre-market tomorrow, you know, you have to be on the lookout for that black candle forming, because if it starts to form, you could get stuck in a bull trap. Now, right now, the share price is at 460. That puts it right here in this circle, in the middle of the circle. That's above the 200 and 300-day simple moving averages. The close was way down here at 305. So there's going to be a big space on the chart, right? So in my opinion, the strategy would be to, if you were in this and you're playing the gap up, would be to use that 300-day simple moving average as your stop loss level. If it drops below 435, that would be a sell signal. If it can stay above 435 tomorrow, then look for this 650 level, the high close there, and then you've got these high closes up here, $7 up here near 775. It could push higher if it can stay above 435. That's going to be the big key. If it drops below that level, that could signal consolidation. You have the 200 simple moving average at 388. That's the other big level to hold below. And so yeah, keep an eye on OCX tomorrow. We'll see if it can if it's going to be another monster runner, or if it's going to turn into a black candle bull trap. All right, thanks a lot for viewing this video. Just keep in mind that we do cover options in the chat. I've been posting daily plays, and just doing my best to line up some option trades with the charts. And yeah, it's been working out pretty good. So come and check it out. All right, thanks for viewing this video. I'll post the link below the video. Thank you.